put your children's name on the deed, you give up a lot of control. Like you can't change your mind later if you want to leave it to one child versus another who might be taking care of you later. You have problems if you want to go to sell it, right? You might have the right to live there, but if you want to go to sell it, you're going to need the permission of the children in order to sign off on the remainder interest of the deed. And then even if they do sell it and you get their permission, a larger chunk of the proceeds are going to end up in the hands of the child rather than you. That creates adverse income tax consequences to the child. Plus, you who sold the house might need the money to buy another house or a downsized house or move, all of which create problems. Never mind creditor problems for the children while they're living. Folks, don't do the life estate this way because it seems to create more trouble than it's worth.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. Call 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Kicking off another week here. It's Chuck, Mike, and Tucker with you. Hope you all had a great weekend. It was beautiful weather over the weekend. I was outside running in shorts and a t-shirt yesterday because it was 70 degrees and I was getting a little sweaty. Just thinking about all the economic data that we had to get through this week. It wasn't the weather that was doing it. It was the data, because we got some big ones here this week. We got retail sales that came out this morning at 8:30. We'll discuss those today, obviously. We also tomorrow have building permits and housing starts. Remember, in order to start a house, you need a permit, so those are always fun to look at. Wednesday, one of the sneakiest Fed meetings I've seen in recent history. Have you heard anyone talking about the Fed meeting this week?
No, there's been a few other things to talk about.
There's been no one talking about the Fed meeting. Jay Powell's going to show up and be like, hey,
where's everybody?
Pay attention to me, you people. So we got the Fed on Wednesday. They're also going to be putting out, as part of that meeting, it is one of the releases of the summary of economic projections. We get those on a quarterly basis from the Fed, and so that's something that we have to look forward to about, hey, how do they think growth and inflation and interest rates may change now that they're getting some more clarity about the policies of the Trump administration? On Thursday, we get weekly jobless claims and existing home sales, or used homes as I prefer to call them.
Mm-hmm.
And then on Friday, John Williams from the Fed speaks.
Important stuff. You're only allowed to do it once.
I can do it as many times as I want, but Tucker will tell me when it's a problem when he turns my mic off. It's fine.
That's fair.
So let's talk a little bit about these retail sales data points that we got this morning before we go any further. Came in at 0.2% month over month,
which is about a third of headline expectations.
Expectations were for 0.6. Excluding autos, came in at 0.3 compared to 0.4. So you say, okay, strip out those volatile auto sales.
Yep.
And more in line. Ex-autos and ex-gas. Remember, gas, obviously it goes into cars, but you strip that out.
It's your opinion.
Don't worry about it. Stripping out gas as well came in at 0.5 versus 0.4% expected. And they also put in place this thing called the Retail Sales Control Group, which basically controls for like a lot of volatile stuff that isn't necessarily representative, and that came in stronger than expected at 1% versus 0.2. So overall, the headline retail sales number, not good, but this is kind of the opposite of the jobs report, where I said, hey, the jobs report headline numbers are good, but underneath there's a couple things you're nervous about. This was more, it's not good, and there's still some things that you need to pay attention to, but overall, I think this retail sales report is fine, actually.
It was coming off of a pretty substantial drop in January, which I think most were willing to blame on wildfires and freezing cold weather. February did not have a lot of those same things going on, and that would be the only other thing that catches my eye is when we talk about a 0.2, it's a 0.2 growth on the previous month. And the previous month was pretty weak.
And here's the one thing that you can point to if you're like, okay, maybe there is a problem here. The previous month was also revised down further.
Yeah.
It came in at negative 0.9% originally. The revised print is negative 1.2. So you look at it and you're like, okay, maybe there is something that's, a little bit dodgy there, because the other thing you have to remember, all of the market uncertainty and tariff hullabaloo, if you will.
Yes, I will.
That effectively started at the beginning of March. I mean, you go back to the end of February and the market had fallen about 3% at that time. I'm looking at the February 28th close. It was 59.54. The high was like 61.47, so it was like 3.5% down. And you eventually saw a 10% dip. And remember, those new Canada and Mexico tariffs went into place the start of March.
Right.
So I think there is an open question because of how quickly things are evolving with, trade policy and how people may be reacting to it. I think there's an open question as to, hey, this data is a month old. Is it already out of date?
Maybe. But I would go back to something here, Chuck, because what we're talking about is retail sales. And the one thing that's pretty consistent about the retail consumer is they don't usually draw back on spending until they can't spend anymore. Right? You go back and look at spending trends in like 2008. When did they stop spending? Well, they stopped spending once the credit card got maxed out because they lost their job. And I'm not trying to make light of that. That was a really sad, difficult time. But it's not as though the consumer is a great lead-in to being able to predict recession. They usually stop spending, like I said, once they literally can't anymore. And so I don't want to read too much into what could be coming because of tariff uncertainty. My guess will be average consumer keeps on spending like they are usually until they can't anymore. The one caveat, which we've brought up a few times now, is that when you talk about retail spending, you do have to focus on the top 10% income earner because that's where half of the spending is actually coming from. And, is there some wealth effect going on there when you talk about markets coming down a little bit, real estate prices getting hit a little bit? Maybe there's some reverse wealth effect that could play in earlier than usual when we talk about the health of the consumer.
So what did well, what did badly for the month? So auto sales down 0.4% for the month. We mentioned, I think it was in December, that auto sales rose 2.8% for the month, and we were like, guys, that's just not something that is sustainable. And so you've seen a predictable retrenchment there. No surprise. Electronics and appliance stores down 0.3% for the month. They're down 5.3% for the year, though. So this is kind of a 12-month trend that we've been seeing there. It's not anything new. It's not new behavior that people are spending less on electronics right now. Gas stations we talked about. People spent less on gas. Don't know how. Don't know why. I don't know. Maybe just all the bad weather we had in February. A lot of storms and stuff like that. People just not traveling as much. Everyone was sick. I don't know. Whatever. Clothing stores, down 0.6% for the month. Okay, kind of something, but I don't know that it means anything. Sporting goods down 0.4%. They've been falling for the last year. No change there. Here's the one that is notable to me. Actually, this is the one that's notable to me. Food services and drinking places, down 1.5% for the month. Now, couple different possible causes on this. I mentioned the weather was horrible in much of the country in February. Think about all the snow we got here in the Northeast. It wasn't just the Northeast. Those storms typically come across the country, and so you had bad weather everywhere. That can absolutely impact restaurant sales. Also, everyone was sick. I don't know about you, but I generally prefer to not go out in public when I'm sick. I don't keep up the fresh-faced, bushy-tailed appearance that I'm known for, and B, I generally prefer to not get everyone else sick.
I would say it's more the latter than the former. But with you. On the gas prices side, just to return there, remember, too, that oil prices, and I know this isn't directly related to gas prices, but oil prices January 15th, we were sitting at $80 a barrel. By February 15th, we were down to $70 a barrel. So a lot of this, again, it's not price-adjusted gas sales. No, it's just gas sales.
It's nominal.
And so I'm guessing cheaper gas was a good portion of the decline in gas sales.
But here's the other thing on food services and drinking places. It can be bad weather and people getting sick. It also could be one of those early signs of, hey, are we pulling back and getting more cautious? Because last time I checked, it's more expensive to buy food that someone else makes for you as opposed to making your own food.
And that would fall in line with some other things that we've been hearing from executives at the likes of Delta and other more, I guess, luxury experience type things, right? If we talk about dining out at fancy restaurants or flying on Delta Airlines, some of that's necessity travel, but most of it is a choice.
Yeah. Let's take a quick break here. When we come back, let's talk a little bit about the stock market. I know we were just going through some economic data, but hey, let's talk about where the market actually is right now when we return.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Wall Street Watch, a full update on the market's performance to date. Weekdays at 10:30, only here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and if you act now, you can take advantage of a special promotion to St. Croix. Experience a vibe like no other and get a $250 per person airline credit when you book a minimum 5-night stay at participating hotels. Go to visitusvi.com and use code VIBE2025 to reserve your trip today. Take your next vacation to St. Croix in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com and use code VIBE2025 to book your trip. That's visitusvi.com and code VIBE2025.
So there's a headline in the Wall Street Journal. It says stocks haven't traded at these levels since September. And I was trying to figure out if they were saying that that was something meaningful or not, given that September, based on the math that I've done, was 6 months ago. So, look, those of you who are regular listeners to the show, you know my favorite saying is that, volatility in markets, it is a feature, it's not a bug. You typically see a 10% crack up in markets every, I don't know, 12 to 18 months. I think the data that I was looking at today, there's been 34 of these since 1950. So it's every couple of years you have a 10% correction. There's some periods where you go far longer. I mean, if you look at, effectively like what the longest periods are between, stock market corrections and like how they've, gone, you do end up with some periods where you go an awful long time without seeing a correction. One of the biggest ones was actually leading up to one more.
You got it.
Leading up to the great financial crisis, you had like a 5-year period from 03 to 07, 1,673 days where you didn't have a 10% correction. You saw another one from 2011 to 2015. And so like you can have periods of like 3 or 4 years where you don't have a correction. You also can have sometimes where, look, there was one in 1980 where there was only 98 days between 10% corrections. One in 1990, 167 days. The tech bubble featured multiple 10% corrections in pretty rapid succession. There were ones in 98, 99, 2000, and 2002. So, like, you can see these things, there's no rhyme or reason to them in terms of when they develop. But I guess the big thing that you need to try to figure out in these, and not that you need to, but that people try to figure out in these is, again, kind of the big question in any investing, is this temporary or permanent, the shift that I'm seeing? And I think more than that, is this because of, a fundamental regime change? And when we say regime change, we're not meaning...
Not political regime.
Not political regime, but investment
Thematic.
regime. Think about, if you're thinking like regime change in markets, AI in 2023 was a regime change from what had been going on in 2022 when markets were puking all over themselves. It was a fundamental shift in regime change. Likewise, inflation in 22, regime change investment-wise from what we had seen previously. So that's what markets are trying to sniff out now is, hey, is it something where this is something that's just temporary and we're going to bounce and go on our merry way? And if not, how do things need to rotate? Because where is the growth going to be going forward? And there's no way to know definitively the answer to those questions until after the fact. You can't just be like, well, it's definitely this. I mean, it may be, it may not be. You never really know until later. On the idea of, technology regime change, everyone and their grandmother bought into the AI bubble. Not bubble. We can call it a bubble, right? To the AI trend.
The trend. I can't say
it's
that
not
it's
a bubble
collapsed
yet because it hasn't really popped yet. Yeah. Everyone and their grandmother bought into the AI trend. Did anyone buy into the 3D printing trend? No. Like it never became a thing, even though it got talked about relentlessly for 6 months or so. It never became a thing.
So we've talked about, we entered correction, what was it, Thursday of last week was when markets first closed in correction territory, often more than 10%.
The only day so far when they have.
Right, Friday they bounced right back up.
Yeah.
Year to date, if we take a look at those numbers through Friday, just to give a sense for, where this all is now, S&P now off close to 4% as of Friday. Dow Jones Industrial Average only off about 2%.
You're saying year to date, not from peak.
Sorry, yes, year to date, not from peak, because we did go up through February and then been coming down off of that peak. The NASDAQ off about 8% year to date. If you want to take a look at Russell 1000, that's off more like 4%. And by the way, none of those indices are now down when you look at the last 12 months. Overseas, stocks have been doing fair bit better. The MSCI EAFE index, EAFE, excludes the United States and Canada and generally looks at all other developed markets, up nearly 9.5% so far this year. And the MSCI Emerging Markets Index up about 4.5% so far. And so we've talked about how tariffs, by and large, well, I think the common phrase is there are no real winners in a trade war, but there are some losers. And generally speaking, most foreign countries' economies might get hit harder than the United States in the face of tariffs. However, thus far, their stock markets are far outperforming the United States stock market at this time. And so there's likely a number of different factors there, but I think one of them is that if you take a look at, for instance, trade of goods from Canada coming into the United States, who's doing a lot of that importing? It's American firms doing business in Canada. It's not,
Sure.
For example, some giant Canadian firm that's manufacturing the cars up there. No, it's General Motors, it's Ford, it's Stellantis that are setting up factories in Canada and bringing that stuff over. And so if you're worried about trade tariff, you're going and selling American stocks doing business in Canada.
Right. If you ask, like, hey, name me, like, the great auto manufacturers of Canada, there are none right now. Yeah. You know, again, it's like General Motors Canada, Ford Canada, Fiat Chrysler Canada. Like, that's what you have. I'm sure there are standalone Canadian auto companies that have existed historically, but I wonder when the last like Canadian-owned automaker went out of business or merged somewhere else. I'd be curious.
I'm sure it's been quite some time because all I can think of is I'm certain there are car parts manufacturers that are
absolutely
headquartered in Canada, just not actual car makers.
Yeah, I wonder if anyone has like Canadian automakers that they've known historically. Please text us at 617-362-1385. Just because, quite honestly, it predates me, I'm sure.
This seems like a point that Ben's going to pick up on trivia at some stage. Name that Canadian car company.
Ooh, that would be good.
Yeah.
That'd be good. Tucker, you find anything?
Magna International?
Come on! You're blowing it.
What?
What do they do?
I don't know. A global mobility tech company, a major supplier of automotive components and systems, parts.
Yeah.
Okay. Anyways, so you got stocks that, again, we're still trying to sort out where this all goes. And I still think in terms of like the economic data, we need to see how a few months of data go before we can proclaim, hey, this is an overreaction or this is, for real.
I'll also say, you've mentioned this, Chuck, but this has not been a COVID-style market sell-off. Right? And important to kind of keep that in mind.
There's been no panic here.
It's been volatile. There's been ups and downs. But, yeah, we have not had one of those 5% down days. There has not been that panic sell-off. And in part, I think, in my mind, part of the reason for that is, investors are kind of torn what to do here because fundamentally, the U.S. economy is pretty darn strong. GDP is looking pretty good. Unemployment's looking fairly decent.
Well, no, GDP's like for this quarter.
It's going down
we'll
rapidly.
Need to see how it looks this quarter.
These things were all at a pretty reasonable starting point ahead of time. And I think the acknowledgement on part of investors is, do I sell everything knowing that the president could effectively turn this ship with the stroke of a pen for now? That might not be the case 6 months from now, but at the moment, that seems to be the compelling case, is that a stroke of a pen very much changed the direction of both the economy and the stock market, and that's a tough thing to invest based on.
Let's take a quick break here. When we come back, I mentioned we do have a Fed meeting this week. We'll talk a little bit about expectations heading into that meeting.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean Paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visit usvi.com and code VIBE2025. Life estates are complicated, and they can cause problems if you're using them to protect your assets from the nursing home. Don't risk losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans in their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. Typically you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are starting off the new week in mixed territory as Wall Street reacts to disappointing February retail sales data, where sales climbed 0.2% last month, softer than forecasts of 0.6%. Investors are also readying for a Fed meeting and comments from Fed Chairman Jerome Powell on Wednesday afternoon. Right now, the Dow is up by about 0.5% or 190 points. S&P 500 up 0.25% or 15 points, and the NASDAQ is pulling back by 28 points or 0.2%. Russell 2000 up nearly 0.5% or 8 points. 10-year Treasury yield down by 2 basis points at 4.28%, and crude oil up nearly 1% higher, trading at $67.78 a barrel. Some acquisition news to report this morning after Pepsi announced it will buy prebiotic soda brand Poppi for more than $1.6 billion. This deal is still pending regulatory approval. Pepsi shares are up by about 2% on the news. Meanwhile, after its recent pullback of more than 12% over the past month, NVIDIA shares down another 1.5% today. The chipmaker and AI giant will hold its annual GTC Developers Conference this week, otherwise known as AI Woodstock. According to CNBC, Klarna will be the exclusive provider of buy now, pay later loans for Walmart, taking a coveted partnership away from rival Affirm. Affirm shares are down over 13%. Elsewhere, shares in Norwegian Cruise Line up 3% after JP Morgan upgraded the cruise operator stock to overweight from neutral, citing that its management has indicated no change in booking curves and cancellation rates or cracks in onboard spend levels. Moffett-Nathanson upgraded Netflix to buy from neutral, saying the streaming giant can monetize more than previously expected, in turn growing profit. Netflix shares are up about 3.5%. And taking a look at some noteworthy earnings for this week, FedEx, Micron Technology, and Nike will all report on Thursday, followed by Carnival on Friday. I'm Tucker Silva, and that's Wall Street Watch.
An uncertain economic moment poses a big test for the Fed. I actually don't think it's that big of a test for the Fed because the data to this point has not really shown any significant deviation from, the prior trend of, late Q3 through through Q4. And as such, what do you think you're going to get from the Fed this week? They're not going to do anything.
Yeah, you're not going to get much of anything at the Fed meeting, nor are you going to get much in the way of commentary. I think where I land on a story like this is the big test for the Fed may be soon to come. And
sure.
Here's what I mean by this is if unemployment actually starts upticking, that's tricky because you are then facing, probably the most important thing that you're responsible for, which is the state of the labor market and making sure that that remains in balance and not affecting long-term consumer health. But if it's being caused by tariff policy, there is a huge tail risk, especially when combined with tax cuts, of a resurgence in inflation. And so the thing you don't want to see from the Fed is volatility in policy either, right? We're lowering interest rates because of higher unemployment, but if things change, we're going to have to shoot those interest rates back up in the other direction. That is precisely what we dealt with in the 1970s that led to one of the worst decades in economic history.
The other piece on that is I know that obviously in the United States we focus predominantly on what's going on with the domestic economy. It's hard enough to figure out what's going on with the U.S. economy most of the time without having to be hey, what's happening in the UK? I mean,
sure.
Does anyone listening actually know what the UK either inflation rate or unemployment rate is? Because I'll be 100% honest.
I don't know.
I don't.
Right.
But here's what I do pay attention to when it comes to international stuff. The last few weeks has now seen a flurry of announcements of foreign countries that are ramping up pretty aggressive fiscal policy. Germany a couple weeks ago said, hey, here's our 500 billion euro plan for infrastructure and defense spending over the next decade. China over the weekend. Now, granted, with a Chinese stimulus announcement,
who knows?
They're not worth the paper that they're printed on, but you still have to pay attention because sometimes you actually get some follow through and it's something that's actually meaningful. And they announced a huge consumer-facing stimulus over the weekend. And so when you're starting to see these things popping up, you think about this in the context of, okay, China's saying they're going to spend more. Germany's saying they're going to spend more. Follow on from Germany is probably France, Italy, and, Spain are going to say they're going to spend more. You end up with kind of this whole follow-on effect that you get as well. And so part of the challenge that you end up with when it comes to U.S. interest rates is, hey, if the U.S. is trying to figure out a way to be more fiscally responsible at the same time that the rest of the world is moving in the other direction, even if the U.S. economy is slowing and the Fed decides to cut, it might not move long-term interest rates very much because of the upward pressure that fiscal impulse from everywhere else puts on inflation, especially when coupled with the tariff side of things. So you might end up with this weird situation. And again, this is not a certainty. There are a million permutations out there. But what if the Fed 6 months from now or 3 months from now, whenever it is, decides, hey, we need to aggressively cut right into ramping up fiscal stimulus from overseas and tariffs applied, to imported goods, you might not get any movement in long-term bonds. And if that's the case, does the
Fed need to intervene on the longer end of the curve? Are
right,
they terribly useful?
It kind of gets back to the age-old question: if interest rates aren't moving, is the Fed actually intervening? These are, again, just things that you wonder about, and ultimately we're not going to know until we see how this plays out. And the other piece is, again, look, you could end up 3 months from now. I'm a big believer. You'll know what's going on with the U.S. economy by 4th of July. Anyone who's like, we need to figure out if it's like recession or not right now, no, you're not going to be able to. By 4th of July, you will know where things are going because you'll have a multi-month trend, in place one way or another. And so, it very well could be the case that we get to, 4th of July and it's like, hey, the economic data stabilized after a weak February and, kind of shaky March, and everything looks fine now. That's absolutely possible. We see plenty of little wiggles in the economy that never develop into anything. Let's see how things evolve, see where things go from a trade policy perspective, and we'll know a lot more as we get towards the middle of the year, because right now, we don't know anything. And anyone who's like, well, this is, going to be the biggest recession. No idea.
Yeah, we're talking about tariff rates that haven't been seen since the 1940s. Anybody telling you that they know how that's going to play out in the economy is full of it.
There's
nobody has any idea.
There's no one alive who was an adult the last time this happened.
I had to look it up. Warren Buffett started his investing career in the early 1950s, so even he missed out on it.
Right. I retract my statement. There's someone alive. They're probably 112 years old. And they're not going to be able to tell you specifically what the economy did through that time period. Because it's just again, this is where we are today, is just in pretty uncharted territory. And we're just going to have to see how this plays out because none of us know for certain. We just don't. Meanwhile, you do have this Fed meeting that's coming up. And so the only piece that you might start to get some chatter about from the Fed is they've been, effectively trying to reduce their balance sheet. And maybe you start to get some chatter about that halting just because you're getting to the point where it appears that most excess reserves are out of the financial system. And the Fed probably doesn't want to continue reducing that balance sheet in the event that, they're not seeing signs of additional excess reserves there. So that's one thing that you could see. Which in theory, hey, if you're not rolling, this stuff off your balance sheet, okay, great. It provides for, a little bit more support potentially for, bonds and bond prices. But I don't think it was a huge thing that was moving things around at this point just because it's been pretty consistent for a while.
The last few meetings, they've been calling the risk between employment and inflation to be relatively equally weighted in their minds. I guess I'd be intrigued to see if they start favoring the unemployment side of that equation more than inflation.
It's the interesting way that you could actually frame it if you wanted to be them, just with the greater uncertainty overall, is, hey, these risks are now in balance, but have likely increased proportionally.
Right.
It's something along those lines. And again, just because a risk is increased doesn't mean that is going to end up, playing out that way. We just need to see how things go. I feel so much urgency from people to just declare things either good or bad right now. And sometimes you just got to see how it goes. It's the data's going to tell you where things go. You don't have to be first to call recession or growth. You can.
Yeah, you only do that. You only need to do that if you're trying to make a career for yourself on CNBC or Bloomberg or
I'm
Fox
not.
Business or any of those places.
I'm not. I got a scam job offer from TikTok today, and I might take that instead of going to CNBC or Bloomberg because I don't think I do very well there. But scam TikTok? Oh, that could be for me, Michael. They say I only have to work half an hour a day.
If you get one of these, they just want your social and address and all those details. Please be careful.
If you get a
PSA,
if you receive a text message from a company saying that you only have to work 30 minutes a day for $1,000 a day, don't respond to it.
Yeah.
They'll call you if they're really interested.
They'll mail you a letter.
And, they'll send you something on company letterhead, and even then, probably don't respond to whatever's in the phone call or letterhead and actually, like, Google HR for the company and reach out that way.
Yeah.
Because I'll tell you, I'm getting like 4 or 5 of these a week now. Not just the job offers, but like the toll scams and stuff.
I was going to say that toll scam that's been going around for a couple months.
A lot of people are falling for that one.
Yeah, a lot of people.
Yeah.
Let's take a break and let's actually make sure that we cover that next on the Financial Exchange.
Yeah.
If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
All right, during the last segment, we were touching on the toll texting scam. I've gotten, I don't know, I feel like I get one of these every week or two where it's, hey, you've got unpaid tolls. Please, follow the link below in order to make sure that you pay your balance. And it includes something that looks like, an easy pass link, but if you actually read the address, it's not going there. And a couple things just general scam principles. Number one, no reputable organization is going to demand payment from you via text. They're just not. They're not.
I feel as though I have gotten texts from medical type stuff of payment dues and things along those lines.
Sure,
since texting in the medical industry is pretty common.
But it's more prompting you to log into a patient portal.
100%.
It's like go somewhere. Like,
yep.
Never ever click on an unsolicited link in a
100%.
text.
Do not.
Number two, these toll texting things, again, things just to pay attention to. There's never any actual urgency. Like, there's nothing that you need to do right now with any of these. You can always
worst case
take
scenario
some
if you
time.
drove through a toll booth without money on your transponder.
They'll mail you something.
They'll mail you a ticket.
They'll mail you something. And look, these things look convincing. So I'm not saying this like, oh, like how could anyone fall for this? Like, I get it. They look pretty convincing.
Oh yeah, my wife showed me the email she got on this a few months ago, and this was before this was such a big thing, and it did look very convincing. Likewise, in New York City, when they had the new congestion pricing go into place, almost immediately drivers were getting scam texts about those specifics, congestion pricing tools. And again, playing on people's
fear.
People's fear and what they're thinking about right away, right? Oh, this is new. Maybe this is how they collect those payments. Take a step back, go do a bit of research, and do not believe anything you get via text message, via email, or even via phone call these days.
Other general scam things, if anyone ever tells you that you need to pay for something either in gift cards or cash, don't.
Or crypto.
Yeah. Like the IRS.
Few red flags.
The IRS does not accept gift cards.
What if they're from a...
they do not accept gift cards.
A registered CVS.
They do not accept gift cards.
Yeah.
So just take a second and really think through what's being asked of you. I know it's hard, and I know that smart people fall for this stuff, so don't be embarrassed if you're someone who's like, oh, gee, I did fall. Just work on it next time. Like, trust me, there's going to be another scam attempt made on you, unfortunately. But just take your time, relax, and think through it.
The sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they can also be problematic. Call Cushing & Dolan, the experts in elder law, by calling 866-848-5699 and request their new guide. It's called Calculating the Consequences of Life Estates. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today by calling 866-848-5699 and request this new guide. In it, you'll learn about the significant effects that life estates can have on your estate plan, including the possibility of losing control of your estate. Call 866-848-5699 and get your free guide today. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Mike, you a big Chris Farley fan?
Yeah.
You ever, think about living in a van down by the river?
I've considered it, yes.
You cannot live in a van down by the Charles River because there is a parking spot on Beacon Hill that is now listed for $750,000. And so this apparently is in the Brimmer Street garage. And so, again, it's listed for $750,000 right now. Here is the quote from one of the listing agents. Quote, "It's a great long-term hold. They're not going to be building any more parking on the hill."
That's true.
Probably true. Probably true. But I just love the idea of referring to a parking spot as a long-term hold. So how diversified is your portfolio these days, Jim? Well, I've got about a third in equities, a third in bonds, and a third in parking. Oh, yeah. I didn't realize that was, one of the major asset classes these days.
It actually leads me to an interesting thought about the New England area, which, think about the Great Recession, Massachusetts in particular, heavily insulated from that downturn. You think about real estate values, for example, in the greater Boston area and just how much more they held up than other parts of the country. Sure. The Massachusetts unemployment rate peaked at, it looks like 8%, whereas the national unemployment peaked at 10%. So just a number of ways more insulated. If this time around, I'm not sure we're going to get an uptick in unemployment this year, but if it does come from government cuts to both employees as well as research programs,
New England's vulnerable.
Yeah, New England is heavily vulnerable to this type of thing, as opposed to the typical, look at Vegas, look at Florida, they're having a tough time. No, Massachusetts, all the universities might not quite insulate us the same way it did last time. So be careful about that $750,000 parking spot, I guess.
Yes, it's hard to know where you might want to incorporate that into your portfolio, according to the listing agent. We're done for the hour, but we got a whole lot more coming up. Stick around.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Life estates are complicated, and they can cause problems if you're using them to protect your assets from the nursing home. Don't risk losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. Typically, you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they also can be problematic. Call Cushing & Dolan, the experts in elder law, at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today at 866-848-5699 and request this new guide. In it, you'll learn about the significant effects that life estates can have on your estate plan, including the possibility of losing control of your estate. Call 866-848-5699 and get your free guide today. That's 866-848-5699. Or you can request the guide online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Hour 2 of the Financial Exchange. Chuck, Mike, and Tucker with you. We got stocks in mixed territory right now. The Dow Jones Industrial Average, or the DJA as it's more commonly known, is currently up 168 points, a little less than 0.5%. The S&P 500 is up 5 points, about 0.1%, but the NASDAQ down 0.5%, 80 points in the wrong direction. Big culprits there. Tesla down almost 6% on the day, Nvidia down about 2%. Amazon and Meta both down about 1.5%. Apple also down 1.25%. So interesting thing, the S&P 500, I mentioned it's almost flat, like it's up 0.1%. Right now, there are 363 more stocks that are up on the day than down on the day for the S&P 500, but the gravity of the big boys is, kind of keeping them struggling a little bit. So if you actually looked at the S&P 500 on an equal weighted basis, meaning each component is the same weighting instead of market cap weighted, it's up about 1% today. It's just the big guys are really, trying to drag it down at this point. 10-year U.S. Treasury is down 2.9 basis points to 4.279 at the moment. And we've got oil, West Texas Intermediate, up 23 cents a barrel to 67.41. I got to say that the headline that you can click on CNBC just comes across as very dystopian for the energy area. Oil up 1% as U.S. vows to keep attacking Houthis. It's a little aggressive, yeah. But I guess that's
factual in terms of what's happening.
It is factual. Gold is up $5.50 an ounce to $3,006.60. We'll see if it gets its first close above $3,000 today. Remember, on Friday it passed $3,000 for the first time, but could not hold it through the remainder of the day, and that is what is going on in markets.
One other thing to mention in terms of equities, you did have all three indices in negative territory in pre-trading. All three opened in positive territory during regular market trading, and now you have all three, the NASDAQ off, and S&P and Dow. Well, S&P barely holding on to gains, and Dow sizably holding on to its gains.
Let's talk a little bit about what we're seeing in the job market, specifically the job market for Gen Zers. And this is a piece in Bloomberg Opinion from Connor Sen. And just to give you an idea, if you look at February of kind of key years and where the unemployment rate is for 20 to 24-year-olds, if you go back and look at 2001, it was 3.9% then. Tech bubble jumped it up to 5.7% and then 6% in the subsequent years.
Sorry, this is for who specifically?
Age 20 to 24.
Got it.
If you look at the financial crisis, in 2008, February of 2008, remember that was before things broke. It was September, October of 2008 when things really broke. In February of 2008, 20 to 24 unemployment was 4.3%. By the next year, it was 9%, and then was floating around 9% for the couple of years after. In 2017, when President Trump came into office in his first term, it was 5.7%. Over the next 2 years, it went down to 4.5% and 4.2%, respectively. We've talked a lot about how good the job market was in 2009. This is the trend that we're on now, though. 2022, 4.6%. 2023, 4.6%. February of 24, it was at 5.3%. In February of 25, it was at 7.4%. There is a growing youth unemployment problem right now, and it is significant. And I know that, we don't get many 21-year-olds that listen to our show.
Don't say that.
We don't. A lot of 21-year-olds don't listen to terrestrial radio.
True.
It's just how it is. As such, I don't think we get a lot of feedback from that demographic about what they are seeing out there. And the story for those who are already in the workforce has been one that we've covered a lot in the last 6 months, which is, hey, if you have a job, you're not really seeing an increase in layoffs. But if you don't, it's hard to get one. You're seeing this in that youth unemployment number. The people trying to break into the workforce, their unemployment rate is up 50% in the last 2 years.
Yeah, so contextualizing this, it is a very challenging job market for especially those graduating in, say, white-collar type, looking for white-collar type jobs because of the stagnation in that labor market. There are other areas where it's easier to find jobs, but it is very much a stagnating labor market, and what that has meant is employers holding on to their existing employees, which trend older, and not doing a whole lot of hiring. The context, though, is important, too, right? When we talked, I don't know why. I had slightly different numbers on youth unemployment, the 2020 to 24 unemployment rate than you did, Chuck. But the numbers that I saw in either case were that we have now hit unemployment rates that outside of COVID we haven't seen for young people since mid-2010s. Yep. 2016 was the last time we were this high. And so, putting that all in context, is it worse than the Great Recession? No. That is not what we are experiencing right now.
It's not really
but that's not a great benchmark.
No, it's not.
So it is a challenging labor market for young people right now. And I don't think that's because there's some youth bias. I think it is entirely because, or by the way, it's not because age bias has reversed itself and suddenly we prefer older employees. It seems purely because companies are in a standstill moment where they neither want to hire nor fire existing employees.
I want to talk about one other thing and again, this is all just like us throwing around what we think is happening on this stuff. Artificial intelligence. If there's one area that it's probably useful to the max right now for companies, it's probably in being able to replicate entry-level position assignments.
So let's take one of the most highest paid entry-level assignments, investment banking in New York City on Wall Street.
Yes.
Typically an in-person job done by 20 to 28-year-olds, pays a whole boatload of money because you work 90 hours a week, and you put together slide decks and presentations and assist with all sorts of analyses, all of which have gotten a little bit easier with the advent of artificial intelligence.
And it's not necessarily that you're just saying, hey, let me feed this into AI and like a senior person's not doing that all, but it might be, hey, instead of needing 3 new banking analysts this year, maybe we only need 2. And if that's repeated across the industry and then in other industries, you've got a problem.
I would also say that, let's take that investment banking example and extrapolate it. You're seeing your younger employees be more effective because of artificial intelligence. You, the investment bank yourself, are also possibly a little bit pessimistic about deal making in 2025. What companies do you know right now that are, actually we've seen a few of them, but looking to make big acquisitions at the moment in the face of uncertainty around trade tariffs? Like it plays all into this and can speak to a slowdown in hiring for those entry-level folks.
Now,
I don't know that the AI effect is actually being felt yet. It's just, again, we're coming up with theories here about what might be happening. It's really tough to measure.
Now, here's the other piece that I want to say. As a proud millennial who eats avocado toast 8 days a week and twice on Sundays.
Yes, that's how you get to the 8.
I know what it feels like to have someone tell you, hey, your cohort is going to be permanently disadvantaged because of the environment that you were in. Because we came of age during the great financial crisis, and everyone said, well, millennials are never going to be able to accumulate wealth. They're not going to own homes, blah, 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 blah. And newsflash, the data that we now have, 16 years after the financial crisis, is that millennials are generally in either about the same place or in some metrics better off than previous generations financially. And so you can't, simply look at this and be like, well, we should, Gen Zers are screwed, or there's always going to be a problem. No, it's not necessarily that. I never like to say that anyone has it inherently better or worse than anyone else from a generational standpoint in the United States, just because historically that's just not how it works. It's like, okay, sure, everyone always likes to talk about the baby boomers and be like, they had it so good, they were able to buy homes so cheaply back in the early 1980s, and then the stocks only went up and this and that and everything. It's like, yeah, but the boomers had to live through the 1970s, which was like a 10-year period of economic suck. So don't tell me that they just had it easy. They had their hard stuff to go through as well. People look back at the greatest generation, they're like, hey, economically things were great for them. They went through the 1950s, and this, it's like, yeah, but dude, half of them died in World War II. You don't just get to be cherry picking the parts that fit your story. Every generation has both good and bad things that they have to deal with, and I remain unconvinced that anyone inherently has it better or worse just because of the exact dates that they were born, unless you're talking about the Spanish Inquisition or something like that.
I'm trying to be as general as possible here, but both of us, Chuck, you and I, and Tucker, entered the labor force, yes, during the Great Recession, when unemployment rate for the overall population, let alone teenagers, was capping out at 10% and remained in the high single digits for most of the first decade of both of our careers. I'm trying to think of the practical advice there. One, I think a lot of young people, for good reason, want a job in their future area of interest, right? You see any of those friends who got the job in investment banking after graduating with an accounting or business degree, and that's enviable. I think my point would be any job that you work, no matter whether it's related to your eventual industry of interest or not, will help you more than, staying out of the labor market and remaining unemployed for a period of time. I don't care if it's washing dishes or, working in the healthcare industry when you want to work in the finance industry.
Sure.
That would be my only takeaway is, certainly having something on that resume, no matter how related or unrelated it is to your eventual field of interest, is very important.
Yeah, look, I'm a big believer that, and again, I think that you only accumulate this as you get a little older. Not that I'm old and gray. I only have
doesn't even have any hair.
No, but I would say my beard's 16% gray at this point.
It's tough to tell, but yeah, sure. Let's go 16%.
It's getting there.
Yeah.
Look, I think that when we're young, we put so much importance on needing to have the right job and this and that. And quite honestly, I think a lot of what we get told about how to work is pure poppycock. I think ultimately a job, you want two things out of it, and the rest is gravy, quite honestly. The first is to work in a place where the people that are around you, generally treat you like a human being and an autonomous being and respect you and don't treat you like crap. For any job where someone's actually treating you like crap, get out and do something else. And the second piece is, hey, can I make enough to do what I want to do? All the other stuff about, quite honestly, well, I need to follow my passion and I need to do something with meaning. I don't know that you do.
That's what 50-year-olds are for. And that's what the money's for.
Yes. As John Hamm says,
you want to follow your passion, there'll be plenty of time for that.
Yes.
But do it once you have a built-up series of expertise that you can go market.
Do some work somewhere that people respect you and treat you like a human being and get paid halfway decently. Other than that, you'll figure it out. Take a quick break. When we come back, we've got trivia after this.
There's only one show that follows Wall Street's continued volatility. Keep it here all morning long on the Financial Exchange Radio Network. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean Paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Heads up, athletes, coaches, and parents. Play for life, not just points. Hypertrophic cardiomyopathy, or HCM, is the leading cause of sudden cardiac death, especially in black athletes in sports like football or basketball. If you feel shortness of breath, chest pain, and fatigue, or have a family history of HCM, talk to your doctor. Don't let HCM bend you for good. Learn how to stay in the game at heart.org/HCM student athlete. Your heart, your health, your move.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
The Financial Exchange is proud of our partnership with the Disabled American Veterans Department of Massachusetts. This year's 5K is Saturday, November 8th, and registration is now open. The race has sold out each of the past 4 years, and slots will fill up quickly, so don't delay. Visit dav5k.boston today and reserve your spot or join Team TFE here at the Financial Exchange. That's Saturday, November 8th for this year's DAV 5K. Sign up now at dav5k.boston. Time for trivia here on the Financial Exchange, and today is, of course, St. Paddy's Day, a day when millions of people around the world celebrate a saint who isn't actually a saint. There are many legends surrounding the life of St. Patrick, but none more ridiculous than the one where he banished an entire species of animal from Ireland. Trivia question today: which animal did St. Patrick allegedly banish from Ireland? Once again, which animal did St. Patrick allegedly banish from Ireland? Be the fifth person today to text us at 617-362-1385 with the correct answer, and you win a brand new Financial Exchange Show t-shirt. Once again, the fifth correct response to text us at 617-362-1385 will get that t-shirt. See complete contest rules at financialexchangeshow.com.
A piece in the Wall Street Journal, and this is going to take us a couple segments to get through because I think there's a lot of meat here, quite honestly. It's titled "The Challenge of Selling High-End Homes in America's Disaster Zones." And honestly, like, what a freaking open they have here. Quote, "Welcome to your dream renovation project. That's the pitch on the listing for a 5-bedroom oceanfront mansion selling for $6.5 million on Sanibel Island, an area on the west coast of Florida that was ravaged by Hurricane Ian in 2022 and then hit again by Hurricanes Helene and Milton in 2024. The home sustained water damage when the roof failed during one of the storms, and the structure should be raised up a little, but most of the value is in the land, according to the listing agent, which is worth about $4 million because it's an acre with direct access to the beach." So here's the thing, is, and again, I'm not poo-pooing this property in and of itself, but I'm sure that the villagers of Pompeii had some really expensive land right before Mount Vesuvius launched an ash cloud down it and wiped the whole place out. And so land only has value if it can hold value. And given the uncertainty about storms and insurance costs and rebuilding and how often you might have to rebuild and what exactly you have to do, you can't just inherently be like, this land has value. If you've been hit by 3 hurricanes in the last 4 years, you have to look at it and be like, maybe it's actually not as valuable as I think, because if the structures keep getting destroyed in some way, shape, or form, no one's going to want to pay those prices for the property, as attractive as the beach access might be, if you can only live in the house for 1 out of every 5 years because it keeps getting wrecked.
The good news about something like this, and some of these other areas as well, although I don't actually know because the Journal article doesn't spell it out, can you get a mortgage on a property like this? Can you buy flood insurance or hurricane insurance on a property like this? I'm sure there's some insurance you can buy, but
how
expensive is it then? Because if you can buy flood insurance on this property, my guess would be that all of us listening right now are subsidizing the cost of it through the government's run flood insurance program.
Which, by the way, seems stupid to me.
Yeah, we've talked about this before, how basically everyone listening right now is subsidizing my $1,700 a year flood insurance policy that should probably cost 5 to 10 times more than it actually does.
You're welcome, Michael.
Thank you, everybody. But that would be, I think that would be the point here, is if that is the case, that you can't insure this type of thing, that's the beauty of free markets. We'll find exactly what this property is worth.
We'll know what it can go for. And
can't get a mortgage, can't buy homeowners insurance, can't buy flood insurance, can't buy hurricane insurance, then yeah, we'll get a real fair market value for it. The problem is in many parts of the country, like the beautiful hills of California outside of LA, you can absolutely go buy a homeowner's insurance policy there, when frankly maybe you shouldn't be able to.
Well, not that you shouldn't be able to, but the cost should be way more because of how the insurance market should be structured instead of how it is. And so this is going to be fascinating to see how this stuff plays out in these high-end areas, because, again, it's one thing if you're an insurer and you're dealing with, okay, home was destroyed and the value was $300,000, great. Now you're dealing with standalone claims for multiple millions, and you're like, how much do I need in order to be comfortable with it, and will the state insurance board let me charge that much? These are some of the questions that we're going to get to. Quick break here. Trivia answers next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News & World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. Typically you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Trivia question today was, which animal did St. Patrick allegedly banish from Ireland? That would be snakes. The popular legend of St. Patrick banishing snakes from Ireland is a myth, as snakes likely never inhabited the island in the first place. Dan from Freeport, Maine is our winner today, taking home a brand new Financial Exchange Show t-shirt. Congrats to Dan, and we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
You know, you say that, Tucker, but there's some pretty compelling evidence that there are currently no snakes in Ireland. So...
I literally just said that.
I know.
What?
Yeah. We got like half the equation here proven.
Is this not on?
I said that. I heard everything you said.
What am I missing?
Half the equation's proven here. I think there's some compelling evidence that maybe it happened.
That what happened?
That he banished all the snakes from Ireland. There's none there. Prove to me that there weren't snakes before.
Got it. Okay, I'm glad we did that. The days of set and forget investing just ended for many Americans. That is the headline in the Wall Street Journal. And I'll read the subheader too, just because it provides context for my subsequent reaction. President Trump's economic policies are sending investors out of U.S. stocks and into cash, bonds, gold, and European defense stocks. Yeah, like a freaking rotation has never happened before in the history of the world. What the heck are we talking about here? This is exactly why set it and forget it investing is a thing, because you diversify amongst a bunch of different things. Since you don't actually know what's going to be in favor. You don't know if it's going to be U.S. stocks, international stocks, corporate bonds, government bonds, commodities, real estate, all these different things. And so the idea behind set it and forget it investing is not just buy the S&P 500 because it always goes up and nothing else can do better. No, that's not what it means. It means diversify your portfolio properly, and you don't have to worry about chasing all these things in any given year if you're not a professional investor and don't want to play that game.
So let's instead talk about not setting it and forgetting it. Patton Price, I'm going to just quote the Journal, said he expected geopolitical chaos in Trump's second term back at when equities were still flying high. He sold all the stocks in his retirement accounts around the time of the presidential inauguration on January 20th. It's, quote, "It's not like I have some fancy thesis and I think I know what's going to happen," said Price, a 46-year-old musician and former political consultant in Richmond. "I just don't think anybody knows what's going to happen."
Then why'd you do it?
Exactly. This completely contradicts your actions, and I think that's the important thing about set and forget. It's not just blindly throwing money out there. You do have to set it first. But so long as your plans on the set side of the equation haven't changed, then most of the times you probably shouldn't change the forget it side, because what he later admits to is he has no idea how he's going to get back into equity markets, when he's going to feel comfortable doing so, and what his thesis is going to be on that. And, Chuck, how many people have you run into that followed this exact same playbook
Dozens.
under Biden, then Trump won, then Obama, and I'm sure many, many presidents beforehand? And that is always the common thing. And frankly, the fact that he almost nailed the top of this, he was about a month off from nailing the top, but that's probably the most dangerous thing about it, because now he's going to reinforce that, oh, yeah, I'm just really good at calling political tension. Folks, this stuff is challenging. When you see the type of retreat from stocks that we've seen over the last few weeks, I get that it can become nerve-wracking for investors, and especially when it happens at a time when you happen to disagree with the political movement that's occurring. That's not everybody, but that is a very common thing that I keep on seeing, is allowing one's personal politics to feed into how they are going to invest their own money. If you're worried that you're allowing that to happen, maybe it's the right thing to do, maybe it's the wrong thing to do, but always ask yourself, hey, what has changed since I put in this set it and forget it plan about my life personally before going down the path of making a bunch of changes? If you are following this through and trying to figure out, hey, where do I go next with that retirement bucket or that non-retirement bucket or this new money that I've inherited or that I have received as a buy out of stock from my employer, whatever it might be, it's much more challenging to deal with that next sum of money that you are now sitting on than it was setting up, say, a retirement plan investment. Give the folks at Armstrong Advisory Group a call. We work with our clients to navigate volatility day in and day out, and we'd be happy to assess that alongside you and give you our view on where things go next and how to adapt to it with your own personal portfolio. The number at Armstrong Advisory Group is 800-393-4001. Book free consultations all across New England, folks. We'll sit down with you in person and explain what it is that we do here at Armstrong. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Also from the Wall Street Journal. It's not a great time to be a saver or borrower. Well, I guess we better just call it a day and give up.
Unsave.
Man!
If this were the case,
reset it.
Wouldn't banks not exist?
I mean, what are we really doing here? So
clearly somebody thinks it's a good time to be a saver or a borrower, because otherwise banks as we know them would not exist in any meaningful way, because that's all they do.
So the point that they're making on this is that savings accounts, the rates that you're getting now are lower than a year ago.
Yes.
Okay. And mortgage rates that you're getting now are, higher than 3, 4, 5 years ago. Okay.
Raise your hand if you're happier with the rate on your savings account today than you were the entire 2010 decade. I'm holding my hand up. I'm pretty content with them even where they are now.
Right. Ultimately, if people decided, hey, it's a bad time to be a saver, they're going to pull their money out of banks, put it somewhere else, and banks, in response, trying to get more money into, so they can lend it out, would say, oh, we need to offer more, higher rates, and rates would go up. So Look, I understand, hey, mortgage rates are not necessarily ideal right now, but
it can't be both.
I'm just going to talk about mortgage rates for a second, because I have a little bit of a secret that I want to share. They're probably not going back down to 2.5%.
Oh, no. Really?
No. That might be the outlier, not the norm.
Yeah.
So I just think that we have to, understand, hey, mortgage rates probably are not going to be in that 3% range again unless something really bad happens in the economy, in which case you might really not be in the market for a mortgage then.
But the good news is that money market savings account that you have is probably not going back down to 0.1% like it was for a bunch of the 2010s.
Unless something really bad happens.
Right.
And then it could. Historically, we do see those kinds of moves when a 300 to 400 basis point move in money market yields is not unheard of if you're going into a recession. So, yeah, I don't know. It seems like we're always complaining. There are two things that it seems like we're always complaining about. The first is the labor market's either too loose or too tight. It's never just right. It can never be just fine.
It's never been Goldilocks.
First it was, all the quiet quitting, and Walmart's paying its truck drivers $150,000 a year, and how can we ever do this? And now it's, hey, the youth unemployment rate's too high. And again, but all these things can be valid, but sometimes we just have to accept that it's not going to be perfect. And it seems like we are always complaining about interest rates, in that either high interest rates are causing inequality or low interest rates are causing inequality, and they can't all cause inequality because otherwise they're not actually the cause of it, and it just exists alongside them.
Yeah, I feel pretty strongly that Elizabeth Warren has argued both sides of that coin.
So I don't know what else to say on this, but it has to be. Here's my view. For savers, it's a fine time. Not the best, not the worst. For borrowers, it's less than ideal. It's probably in the 30th percentile of ideality, of idealism.
Sure.
It's the borrowing costs are 30% ideal. They've been better, is what I'm trying to convey. But it's not. Listen, you want bad borrowing costs? Let me introduce you to 1980, when you can get a mortgage for the low rate of 20% a year. We got lulled into a false sense of security, thinking that interest rates, on mortgages were 3 and 4%, and that's just not where they historically land, unless borrowing costs for the U.S. are 1 or 2%, and that only happened in the decade after the worst financial crisis since the Great Depression.
Right.
I rest. Let's take a quick break here. When we come back, we'll do a little bit of stack roulette.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Mike, what do you got for me for Stack Roulette?
I've got Gen Z taking micro retirements. The oldest Gen Zer is 28 years old, and we just got done saying, like, hey, these people actually do have a pretty tough labor market. I am going to take a turn on this one, though, and say that if you have only been in the labor force for like 6 years and have been there now long enough to want out, well, okay, we've got another thing to talk about here. If somebody wants to quit work and go travel the world, far be it from me to say that you shouldn't or can't do that. Like, I would say that your young 20s is a great time to do that. But a few things to think about as you're, engaging on that journey, none of which young people typically think about, but like, how are you going to get health insurance? Assume you break your leg on a trip overseas.
Which does happen.
Which happens, pretty reasonably frequently. The picture here is some guy trekking across somewhere that looks absolutely beautiful. Where are you going to pay that bill from, and how are you going to escape falling into a mountain of debt down the road? There are actually more and more companies that I'm hearing of providing something like a sabbatical to employees. Charles Schwab is a very large company that does this. Every 5 years, I think you get something like 3 months off of work because they see it as a massive benefit that they can offer people. But I would just say to those younger workers in general that yes, it may be an excellent time for you to take a little bit of time off of work. You might not have the responsibilities of children or a mortgage or any of those things yet. But do a little bit of planning and make sure you understand what you're going to do if you do fall into hot water, because that type of thing can happen. I know none of us think about getting injured or dying when we're in our 20s. But those are the things that come to mind for me. Like, forget about the career sustainability of taking a few months off work. Plan for those bad outcomes and make sure you're covered.
I want to reference one other thing that you said, just because I think it's relevant, in that, hey, a lot of people in their 20s, like, they don't have kids or families at that point. And I think, like, in hindsight, looking back at my 20s, I think I wish that I had done one of two things more fully. And these are, it's going to sound a little bit weird, but I wish I either spent way less time working and more time just out partying and hanging out and having like a great time.
Hell yeah.
Or I wish I spent way more time in the office.
Oh.
Either I wish I had committed to either loafing or working hard more thoroughly than I did. Because I think I tried to live like this idea of work-life balance. And honestly,
when you're 23 years old, it's not important.
Right. It's kind of a mistake then, quite honestly.
Yeah, I'm with you.
It's kind of a mistake then.
Either be, a 9-to-5er,
right,
or be like, I'm going to take the evenings to study for my master's and commit to that. Because
get it done then, because once you have kids, it's
it ain't
hard.
happening.
Like either like bust your ass to get like all that work done, or just do the minimum and have as much fun as you can. Like, I'm not saying, like, don't do your job. I'm saying do what's required of you and like, have as much fun as you can, because two things. A, like, you won't have the time to later on, and B, your body won't be able to handle it later on either. And future you will be like, yes, I'm glad I did that then.
Yeah.
Having said that, like, everything works out. Like, your life is what it is anyways, but I don't know. Sorry, I got too philosophical there. Let's see. What do I want to do here next? Yeah, this is actually a really good one. Your kid. There's a good chance your kid uses AI to cheat. And here's where we're heading on this is, you know how schools in the last 15 years have moved to like having so much technology, like all your kids' homework assignments are online, and there's tablets and technology and this and that. Like that's where everything's gone.
First grade classes all had iPads in them.
My kid is in kindergarten, and he came home talking to me about, I think it was Chromebook. I'm like, what?
Yep. Every class has those things in there now. Yeah.
Guess where we're heading?
The opposite direction.
Closed book, handwritten tests.
Yeah.
And quite honestly, okay. Couple things on this. On one level, you say this is good because the problem with AI, in my opinion, is it robs from us the most important skill that we need to pick up during school, which is the ability to think critically. Because if you can't think critically, then you kind of lose.
Yeah. I do think about like university level courses, and like there were no closed book handwritten tests. Like everything.
Oh, we had them.
I had a few of them, but again, by and large, most of my courses were, write 5 papers on this subject, and it wasn't a whole lot of sit down with your Scantron during office hours.
And the closed book, like the idea behind it is not that like you don't have resources in the real world, but much more, hey, you need to prove that you can actually think about something, and I want you to be able to, like, I need you to show me you can do that and you're not just using AI. But here's the other piece. I'm also a big believer in you need to couple that with exams that allow for the use of AI in the appropriate, manner, because if you don't allow people to learn the tools of the trade that are going to be available to them, you're disadvantaging them that way as well. Yeah. This would be like if you were going to trade school, and again, I haven't gone to trade school, so like if any carpenters are like, Chuck, you're the dumbest person ever, I get it. Like, fine. But this would be like going to trade school and being told, you can't use power tools. You have to just use, the handsaw back and forth. No, like that's dumb too. Like, you don't just, you have to be able to balance all of this, because ultimately the ability to think critically while using AI is what you're trying to get to, because then you can use the power tools and figure out if it's actually doing what you want to do. That's like the full package there. That's the 5-tool player.
It is a bit different than this, but it's not honestly all that different from when, in elementary school, the internet was just coming up and you did have to...
Yeah, but the internet was hamsterdance.com.
It was, but I mean, do you remember a kid putting together a presentation where they had literally copied and pasted from an internet site and it was abundantly clear that happened? That's the updated version of what kids are doing on AI tests now.
Here's the thing. I have enough teachers in my family that like the amount of times I've heard about someone just like referencing Wikipedia as the source for something, or just copying and pasting a Wikipedia page, like there's a laundry list there. This is a little bit more insidious, I think, in that it's harder to, if you don't know the student to begin with, it's harder to tell like where the student's own work stops and the AI begins. Yeah. And that, I think, is the challenge on this. But ultimately, this is going to be something that we are going to figure out because we have to. Like, there's no way around it. Otherwise, we're going to become dumber. Which there was a big piece in the Financial Times last week about, are we becoming dumber? And the answer is maybe. And it's probably because of the smartphones, which have made us dumber. Let's take a quick break for the rest of the day. Back at it tomorrow. We've got building permits and housing starts tomorrow. We'll fill you in on that and more on the Financial Exchange.